Hello, trading is closed on March the 7th, 2019. Let's go over our call. Look for the pattern with the early low. We got that. Tomorrow's pattern also has the early low. In the absence of a big drop in the first hour or two, tends to be a rally day. Strong likelihood of closing near the high, particularly on Friday. We said that the pattern today should gap outside the prior day's range. We got that. And we said even though there were higher targets, I thought they might not work because other than these targets, everything else was pretty negative, and that worked too. During the day, we got a sell signal. That's worked. But there's an optional target that we trade past this line, which gives us a target of 27.59.29. It's a 95% chance this number will print tomorrow, and that's my call. As always, gapping down sharply, it's probably out of reach. Otherwise, that's my call for tomorrow. There actually are some positive things in this chart. We gapped down, had a new low, hit a lower low, couldn't hold on to any of these lows. And actually, with less than 5 minutes left to trade, we couldn't even hold on to this low. So that's the rejection of the low. And it leads to higher prices unless we invalidate it by taking that low out early. Now this is our count. I still think we've topped out here and we're in a fall. Should have a ways to go, but that doesn't mean we have to drop in a straight line, and doesn't mean we have to drop tomorrow. In addition to the inability to close under these lows, I think it's difficult to count this decline as a 5-wave pattern. It looks like threes to me. And if that's A, and if that's B, and that's C, you can see how C is equal to exactly twice A. So it's a reasonable target. Now here, back in the middle of last month, we had this hole in the wall gap. And we said that these things fill usually pretty promptly. There's support under the low of the wall. Took us a while to fill this, but here's that line, and you can see how that support's held. In addition, this low was a Fibonacci target of the prior consolidation. So we have support, inability to break and hold new, shouldn't say break, inability to hold new lows, higher targets, a low to high pattern. Everything is pointing to higher prices tomorrow, assuming we don't gap down, take this out. Now, tomorrow is the employment report, I guess. It's not the first Friday of the month. For some reason, they didn't do it last Friday. And I think it's kind of hard to predict what happens. Those employment reports can make all this analysis seem worthless. So I can't say it's impossible to gap down. But for right now, anyway, I'm saying this first leg down's over. And we should get a rally, and we have targets that are higher than we are now. And that's today's call.